Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
You're listening to Expert Money Matters with me, Georgina. At Chase Buchanan, our goal is to provide total clarity in an uncertain global landscape. To help you stay connected and updated wherever you are, we've adapted our weekly market update email into this convenient audio format. Here is your weekly market update for the 5th of August, 2026.
Good morning or good afternoon, wherever in the world this week finds you. August has barely begun. The nights are warm, the days can feel almost overwhelmingly hot, and yet somehow a familiar feeling is already beginning to creep in. Summer is slipping away. Financial markets, however, never really seem to slow down in the first place. Over the past week, both the Bank of England and the United States Federal Reserve kept interest rates unchanged. Britain set a date for its first budget under the new government. Big tech earnings gave investors a clearer test of whether huge artificial intelligence spending is paying off. And oil prices moved sharply again as attention returned to diplomacy and continuing disruption in the Middle East. A quick note on timing before we continue. This audio update is based on our weekly market update email, which was researched on Monday, the 3rd of August, and has been updated on Tuesday, the 4th of August. Political announcements, market conditions, and geopolitical developments may have changed after that point. So first, interest rates. The Bank of England kept bank rate at 3.75%, while the Federal Reserve maintained its target range of 3.5 to 3.75%. The more interesting story, though, was the voting. At the Bank of England, the decision was 6-3, with 3 members preferring an immediate increase to 4%. The concern remains that higher energy costs could feed through into broader inflation, even though domestic inflation pressures have continued to ease. The Federal Reserve showed a similar pattern. Rates were held, but 3 of the 12 voting policymakers also wanted an immediate increase. For expatriates, this matters because expectations for UK and US interest rates continue to influence borrowing costs, returns on cash and bonds, and the relative strength of sterling and the dollar. So, while the headline is that rates were unchanged, the underlying message is more nuanced. Both committees are more divided over how to respond to inflation risks. Turning now to the UK, the budget finally has a date. Chancellor John Healey will deliver the government's first budget on the 28th of October, 2026. That gives us the first firm fiscal milestone of the new Burnham government. Prime Minister Andy Burnham has also ruled out changes to stamp duty at this budget, removing one area of recent speculation. Beyond that, however, there have been no confirmed changes to capital gains tax, inheritance tax, pension taxation, or the taxation of UK property held by overseas residents. For British expatriates with UK pensions, investments or property, the important development is therefore the timetable rather than a new tax rule. The next few months should give a much clearer indication of the government's direction, but for now, speculation should still be treated as exactly that until policy is formally announced. Next, artificial intelligence. For several weeks, one question has been hanging over global equity markets. Are the enormous sums being invested in AI actually producing enough return? Last week's company results provided clearer evidence. Microsoft reported 43% growth in Azure, while Amazon Web Services grew 37%. In both cases, strong cloud demand suggested that large infrastructure investments are being supported by commercial demand. That confidence carried into Monday when Amazon's continuing share price rally pushed the company's market value above $3 trillion for the first time. Meta showed the other side of the story. Quarterly free cash flow fell sharply amid heavy AI infrastructure investment, and its shares declined following its results, as investors questioned how quickly that spending might translate into additional earnings. The important shift is that investors are becoming more selective. Simply spending heavily on AI is no longer enough. Investors increasingly want to see revenue, cash flow, and a credible route to return on that investment. That matters because market cap-weighted US and global equity indices remain concentrated in a relatively small number of very large technology companies. Now to the wider US economy. US gross domestic product grew at an annualized rate of 1.5% in the second quarter, down from 2.1% in the first. That is a genuine slowdown, but the detail beneath the headline was more resilient. Consumer spending grew 3.2%. Meanwhile, real final sales to private domestic purchasers, a measure combining consumer spending and private fixed investment, rose 3.9%. Inflation has been coming down, but it is still running faster than the Federal Reserve would like. The Fed's long-term target is 2%. In June, headline PCE inflation stood at 3.7% year-on-year, while core PCE was 3.3%. In June, headline PCE inflation stood at 3.7% year-on-year, while core PCE was 3.3%. That leaves the Federal Reserve facing an awkward combination. Economic growth has slowed, but underlying private demand remains relatively resilient, while inflation remains above target. For investors, that means the outlook for US interest rates, Treasury yields, and the dollar remains finely balanced. And finally, oil and the Middle East, where the picture has changed again since Monday. Oil prices fell sharply at the beginning of the week after President Donald Trump paused plans for further attacks on Iran and said more time would be allowed for efforts to reach an agreement. On Tuesday morning, however, prices moved higher again as uncertainty over those diplomatic efforts returned. President Trump has said talks are taking place while Iran has publicly denied that negotiations with the United States are underway or that meetings have been scheduled. Discussions involving Oman have instead focused on the management of the Strait of Hormuz. More importantly for global markets, the physical shipping situation remains highly disrupted. Traffic through Hormuz showed very little improvement at the start of the week, and on Tuesday a cargo vessel reported being hit by an unidentified projectile near the strait off the coast of Oman. OPEC Plus has also agreed a modest increase in production quotas from September. However, additional production capacity has limited effect if major export routes remain constrained. So, while the sharp fall in oil prices on Monday offered some relief from an inflation perspective, Tuesday's developments are another reminder that the underlying situation remains unresolved. Financial markets may move quickly on hopes of de-escalation. Physical shipping risks can take considerably longer to disappear. So what comes next? Attention now turns to the US employment report on Friday, the 7th of August, which could influence expectations for the Federal Reserve's September meeting. In the UK, focus will increasingly shift from government appointments towards the substance of the economic programme ahead of the 28th of October budget. And in the Middle East, the immediate question remains whether diplomatic signals translate into a genuine improvement in security and shipping through the Strait of Hormuz.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.